What is going on, everyone, and welcome back. So guys, real quick, in today's video, what I'm wanting to talk about is, in my opinion, how many stocks should you be holding in your portfolio at one time? Now this comes, I'm kind of gearing this more for beginners, people who have a limited amount of experience in the stock market. And really what I'm driving at here, and the overall thesis of this video, is that in my opinion, less is more. Okay? In my opinion, holding less amount of stocks that are more concentrated, focused, and studied and researched is always going to defeat holding lots and lots of different stocks, lots of different positions, and there's quite a few reasons for that. I've heard of people holding just ridiculous amount of stocks in their portfolio, and obviously I can't keep track of everything. Unless you just nail every single position right on the head, it is really hard to make good gains when you have so many different stocks, some running up and down and back and in between. Okay, there's three big factors I look at when making a decision about how many stocks to hold. Okay, some of these things don't just stand out until maybe you've had them explained a little bit, but my experience, like I said, has always kind of brought me back several times, is that when trying to balance a portfolio, manage it properly, having a lesser amount of positions that is always going to end up outperforming holding lots and lots of different stocks. And let's just get right into it. Guys, if this is your first time tuning in, this is the Worth More Investing channel, and we talk mostly stock market and financial related things. So go ahead and subscribe now so you don't miss any content. Alright guys, so the first thing we need to talk about when you're learning how to balance a portfolio and how many positions of stock to hold, the first most important thing you need to think about is your brokerage fees. Okay? Now with most traditional brokers, every time you buy a stock or sell, you're going to get charged a fee. Okay? You're going to get charged anywhere from $5 to $10 fees, sometimes more than that, depending on who your broker is. I have a list of a lot of different brokers here, and obviously I'm totally aware of like Robinhood and M1 Finance. So Robinhood has popularized zero commission trading, and M1 Finance has popularized fractional share trading. And I would even suggest to go down some of those roads and use some of those brokers, because you're saving money on every trade. You are still a little bit limited with Robinhood, and you're still a little bit limited with some of the things you can do on M1 Finance. But if we're just going to look at your more traditional brokers, first thing to keep in mind, obviously, the more stocks you've bought, the more you plan to buy, the more your trade commission is going to go up, which is more money you're spending on basically nothing. Okay, and especially when you take a loss. Okay, when you take a loss on a stock, tack $7 or $10 to it. I know it's probably not a lot of money, but it's enough. Okay, it's enough to make a difference, and it does add up. Okay, so this is again why I try to steer people, try to tell people, have more focused positions in the stock market. Get the stocks you want, buy the companies you believe in, that you've done a relentless amount of research on and have studied a lot. Get the companies you want to buy in. Don't just get all kinds of different stuff. Like I said, that trade commission will catch up, and after a while it will seem like you're spending a lot of money just to keep numerous amount of stocks in your portfolio. Okay, and also I have a link in my description box for Robinhood. If you click on that and sign up for Robinhood, you will get a free share of stock, and so will I. So it's Robinhood has all kinds of good benefits just to using their brokerage, and most of my experiences have went very smooth and easy. So make sure to check that out as well. All right, guys. So the second thing to consider how many stocks you want in your portfolio is share dilution. Okay, and so what I mean by that is that let's just say you're holding 50 different positions or 100 different positions. These stocks, you're going to have some running up, some falling behind, some falling way behind, maybe a few of them running up real high. You might have, a lot of them just staying where they're at. But after all is said and done, the more stocks you hold, the more diluted your gains become. The lesser your gains become. And in my opinion, if you want to go down this road where you own so many stocks, you should probably just put your money in index funds or mutual funds, okay? Because I've been there. I've had a portfolio in the past, way too many positions, and I'm not seeing the growth I want out of maybe the couple of stocks that I'm really truly interested in. And I got a lot of stuff in there that, for example, oil companies, oil price might not be going up. So you're taking losses there. Energy companies might be taking losses at the time. If tech is in a lull, if military defense, any of these kinds of companies you're involved with, if they're not moving in the direction you want them to be moving in at that time, if the stock market isn't moving in the right direction, you're going to be doing good just to be keeping pace with the S&P 500 or the Dow Jones Industrial Average. And if that ever becomes the case, like I said, you're better off owning, like a concentrated mutual fund or index fund. And that takes really all the work out of it for you. That they balance the portfolio and just sell you the funds, And so that's one thing I really want you to be aware of is, the more stocks you hold, the more diluted your gains will become, unless you're just ridiculously lucky. Every stock you ever buy just runs straight to 100% gain or 50% gain. It's extremely rare. So my big thing, guys, don't cut your gains and don't create more losses just to have more positions of stock. It doesn't make a whole lot of sense at the end of the day, okay? All right, now the third thing to consider, guys, balancing your portfolio, how many positions you should be holding, is the fact that you can easily overextend yourself with too many positions, okay? So if you had 50 or 100 positions in companies, you have to think that's 50 or 100 quarterly reports you have to pay attention to. That's 50 to 100 companies you have to do analysis on. That's 50 to 100 companies you have to, keep your mind on the news. And then not just that, not just being plugged in and tuned in to what's going on with a company, but then trying to make competent decisions with what's going on with them. One quick example that comes to my mind, where I think a lot of people were overextended in their positions, was a few weeks ago when Mark Zuckerberg was testifying before Congress over the data piracy issues. Okay, and I think a lot of people kind of panic sold their stock in Facebook, just because it made sense in the moment. And this isn't a good look for Facebook. And why is the CEO answering questions to Congress? And that's a whole nother topic for another day. But since that time, Facebook has hit all-time highs, I think several different times. And, selling your stock just based on that right there with little other information would have been a terrible idea, And that's kind of the two effects that being overextended in your portfolio will bring you, is that it will either bring a mass paranoia effect to you, where you are so dialed in, you are so plugged into all your different news and anything of that nature. You're so plugged into your positions that any little thing that comes up, you're going to feel like you have to sell the stock, and you're going to have to sell and get out of this position, and you're going to have to. You might read a negative article, or a short seller might write an article, and you read it and say, hey, I got to get out of this position. This doesn't look good. And then that company might still be great, go on to other great things. Okay. The other effect being overextended can do is just plain laziness. I've been there. I've been in that situation before, where I think all my positions are good. These are all good companies, and I don't have to pay a lot of attention to them. And meanwhile, you've got companies in your portfolio you need to be getting out in the trash, okay? Because they're dropping, they're not going in the right direction. You're not keeping up with your analysis, and you're not keeping up with even the fundamentals of the company. They change every day just like everything else. So Big thing to keep in mind here, guys, again, brings me back to less is more. The more positions you have, basically the more work you have to do, okay? And instead of being overextended, if you want a very diverse portfolio, like my suggestion would just to be buy index and mutual funds, okay? So how many positions should you be holding? How many stocks should you have in your portfolio? This is my opinion. This is how I see, especially again for beginners, people that are very new to the stock market. I believe if you have $5,000 or less in your brokerage account, you should hold somewhere between 3 and 5 positions in companies. And I would also invest in 1 or 2 S&P 500 based mutual funds or index funds, okay? Now, if you hold somewhere between $5,000 and $100,000 in your portfolio, I could see getting involved with maybe 8 to 10 companies and then maybe 3 index or mutual funds, okay? Now, if you have over $100,000, and this number can go up infinitely, but if you have $100,000 or more in your brokerage account, I would see holding at the most 15 positions in companies and maybe 5 index or mutual funds. Even at 15 though, even if you have 15 positions in stock, just keep in mind you do run the risk of being overextended and you do run the risk of dilution, where if you're not more focused and you're not more channeled into, the companies that you should be involved with or the companies that you want to be involved with, being overextended to me is the worst kind of condition a trader can be in. Is that, if you're going to manage your own portfolio, being overextended is just a pain in the neck you don't want to deal with, okay? Proper amount of research, proper amount of study, and the proper amount of time before you buy into a stock in lesser positions, you're going to find it be a whole lot more fruitful than holding lots of different stocks in a portfolio, okay? Guys, I hope you enjoyed this video. Drop me a like. Don't forget to subscribe. And as always, have a great day.